Hi everybody, it's Trevor Hammond here with Sierra Pacific Mortgage, coming to you with a quick story, and I'll tell you this is going to be most relevant for any of you homeowners who are currently paying extra on your mortgage or wondering if sometimes you should be paying extra. So what I'm going to share with you today ties into the first book that I had released that I've given tons of classes and tons of trainings on and education on, Borrow Smart, Retire Rich. And the first two concepts that I've been teaching for a long time are safety and liquidity. Those are two financial planning concepts that we need to understand how to apply them to real estate, to mortgages, to borrowing and repaying on a mortgage and any other debts. So here's what I would do. I used to give a lot of classes. Some of you, if you happen to watch this, were probably in one of my classes. I'd get about 20 people in the room every time. And when we got to this part of our class, the education, I'd say, hey, does anybody happen to have a $20 bill? And inevitably, there'd always be somebody that said, yeah, I got $20. And they'd hold up, I'd go, hey, cool, can I borrow that? So I would take it, and then I'd say, ask for this back. Ask for this money back. And they'd kind of look at me awkwardly, look at some of the people in the room and say, can I have it back, Trevor? And I'd say, glad to give it back to you, but first I need you to fill out this 4-page loan application. All right, I know there's a lot of details on there. I need everything that's going on in your life. And then once I get that back for you, I need to run your credit first. Okay, see how you've been paying people. And God forbid, that I run your credit and you missed a credit card payment when you were on vacation last year, because then, this is in jeopardy that you just gave me. I need to see what you've been doing the last 2 years. I hope your job hasn't changed. Really hope you didn't start your own business in less than 2 years ago, because that's going to really make it hard to count any income. And there's going to be a bunch of fees to get it out, just so you know. If everything else rings true and you look good and you qualify, there's quite a few fees we're going to have to figure out on how we structure that. But if everything works out, here's what I'm going to do for you. I'm going to give you 16 of this 20 back. How's that sound? And you'd start to see the dots connecting, because they'd start to see how the guidelines that the mortgage companies work with impact their access to their money, right? So when you go put $100,000 down on a house, or you're sending into your bank or the servicing company of your mortgage an extra $200 a month, this is a very important lesson. How do I get it back? There's only 2 ways to get it back. You can borrow, which means you're refinancing or you are getting a home equity line of credit, or you're selling. And you don't want to sell in times of need. That's usually not a good long-term investment strategy. If you just lost a job, or there's a great opportunity coming up, or gosh, I started my own company a year ago and I need some capital and it's all in my house. Guess what? It's going to be really hard to get this, and you're never going to get all of it, because the company, the mortgage bank, me in that example, I'm going to keep 20% of this for my own safety, not yours, my own safety. So as I said at the beginning, this is a quick reminder and a lesson/story to any of you out there that are currently paying a little bit extra on your mortgage. Maybe you're getting ready to buy a new house this summer and we're going to have a whole bunch of money coming from the sale. And we need to sit down and really think about, is putting all that money inside the walls of your house in the form of a down payment or extra principal prepayments, is that the highest and best use of your cash? All right. And it's different for everybody. So that's why we have to go through a very unique planning concept and really think through what are our other goals with money, because understand that once you put it in there, it's very hard to get out. All right. Hope that resonates. If not with you, please forward this on to other people. Share this, because there's a lot of people out there that, as I say on the back of my book, that are heating and cooling their house with the windows open. And when you do that for 40, 50 years of home ownership and borrowing and repaying on mortgages, it's no wonder people aren't going to be able to retire when they want and how they want. So as you can tell, I get pretty fired up on this. I'm very passionate about it. But understanding how this $20 gets handled, it's the same concept as how $200,000 gets handled when it comes to owning real estate, leveraging it with a mortgage. All right. Hope that helps. Take care, and I look forward to hearing any questions you have. Bye-bye.